Mayuresh Joshi from Angel Broking as well joining in. And Mayuresh, a bit of a mixed bag, just trying to figure out what may have led to the PAT disappointment, considering that has come in sub-expectations. The top line has matched the ET Now estimates and the margins have actually come in higher at 28% for DRL.
Afternoon, Aisha. Oh, yes. So again, I think on the top line front, the numbers a little bit below what we were estimating. The EBITDA margins probably a tad bit higher. So we were going in with around 27.1%. So 28% is a surprise on that front. Profitability, again, I think below estimates, but one really needs to understand whether there were one-off exceptional items which affected the bottom line.
It would be interesting to watch out what those exceptional items are this time around. But let's talk a little bit about the margin picture, Mayuresh. No doubt that has come in fairly positive, 28% versus estimates of close to 24.6. What do you think, led to this kind of an improvement in margins? And more importantly, do you think Dr. Reddys can sustain margins at this kind of a level?
No, clearly, Avan, I think if you go by the management transcript specifically, post the second quarter numbers and what has probably transpired in terms of the warning letters that got issued, you're probably still talking about the EBITDA margins probably staying in a range. Clearly, I think the other important component is also the R&D expenditure, which has remained quite high for Dr. Reddys. So in our own estimates, I think we're still expecting around 11% to come through firstly on the R&D part. So one really needs to understand on the generic business how the US markets have performed, what probably happened with the PACI business and the Russian business as well, considering the ruble depreciation that we probably witnessed. So clearly, I think the expenses specifically on the R&D front are expected to stay high. But again, I think margins in the management guide can remain in this range of around 26 to 28%.
Black box continues to be the warning letter that they received at Srikakulam. What is it that you're hoping to hear from the management commentary on that one?
Hello.
Meeta, that question was for you.
Yes. So clearly, obviously, I think Srikakulam and the other two plants both, we would like to know, how the remediation is picking up. And also we have to remember that beyond these three plants, FDA has also asked them to get a third-party, assessment for all the other plants as well globally. So I think we'll have to know that, how things are progressing and when can we expect a re-inspection of these three plants particularly. I think that will be the key thing to watch out, basically.
I think, the big headline or, crucial comment that we would really be reading into, apart from, of course, the big numbers, is that the management says they are meeting the FDA expectations and that remains the highest priority. Now, this is a fairly important statement because there have been so many problems when it comes to Dr. Reddys. The recent warning letters, just in November, the US FDA issuing the warning letters to two of their API facilities in Andhra Pradesh, one oncology formulation facility as well in Visakhapatnam. Post this, Dr. Reddys, of course, can continue to supply to the US markets from these three plants, but those future approvals will be put on hold. And that, of course, had made investors jittery when it came to Dr. Reddys. So US sales from these facilities contributed a good 10 to 12% of the total sales, according to analyst estimates. So would have been very crucial. How would you read into a comment such as that, Mayuresh? Do you think that it can calm perhaps a lot of the jittery investors? Okay. Let's get in that view then, Meeta, from you, given that the management is alluding to the fact that meeting FDA expectations remains the highest priority. Does this calm some jittery investors?
Not really. So I would say that, they got the warning letter was made public only in November, late November. So, I think there will be still some time as to getting back the confidence of, how things are meeting up. So I think it's too short a time. We'll have to probably wait and see how things are going. But I'm sure that's a priority and that is what they've been always highlighting it in the past conversations as well.
Ajay as well is on the, on the show with us right now. Ajay Tyagi from UTI Mutual Fund. And Ajay, the management commentary itself says that meeting FDA expectation remains the highest priority for Dr. Reddys' management. And I guess that really is the big overhang, right, when it comes to any and every pharma company right now.
Yeah, hi, good afternoon. So I think that's correct. The way in the last 12 months we've seen a slew of these 483 observations for many of the Indian pharmaceutical companies, it clearly brings to fore the importance that managements in India will have to now give towards the good manufacturing processes, or GMPs as it is called, of all their facilities in India catering to the generics either in the US or perhaps even into Europe or the other countries.
Okay, Mayuresh, just wanted to get in a call going forward as to how you see, the US sales, moving, given the fact that we've had the US, the rupee depreciation, the US drug portfolio as well has been in focus, might see a little bit of pressure on account of the higher competition, but what's the outlook when it comes to the US sales growth?
So clearly, I think one really needs to understand from the management the kind of resolutions that they're probably doing on all three of their plants, which are probably Srikakulam being the most important out of these three, specifically for the U.S. business. So clearly, I think the management outlook thereof is going to be key. Again, I think U.S. business is expected to grow on a very flattish kind of a scale. So the opportunities that they've currently got in terms of filings are pretty huge. So they've got a very strong product pipeline. They've also got very strong para-4 opportunities, which gives it a huge amount of revenue visibility. But one really needs to understand the FDA concerns, the resolution thereof, which is going to be a long, drawn-out process. So more or less, I think the U.S. markets might show some amount of flattish growth going forward. And I think the domestic markets is something that can come back into focus for Dr. Reddys in the interim till this overhang is problem.
Meeta, post this mixed bag of a performance and the US FDA overhang persisting, would you change your rating for DRL? What is it now, and would you tamper at all with your price targets?
So currently we have a sell rating with a 2920 target, and so I believe the numbers definitely look better as far as the margins and the top line is concerned, but I would still need to have a better look and the detailing before I take a call on this.
Ajay, just wanted to get in your opinion as to what the call is on Dr. Reddys post these kind of numbers that they've delivered, and is there any sort of, blanket view that you have on the pharma space as a whole?
Yes, I'm afraid I can't talk about specific names, but yes, on the pharmaceutical sector, we remain optimistic. A few reasons for that. First of all, the generics opportunity in the US is an opportunity which will continue into the foreseeable future. Because of the focus of most of these Western governments, including US, towards low-cost generics, and where India and Indian manufacturers fit in as natural partners there because of the cost advantage. And B, India's own domestic pharmaceutical story, where we all are aware that the per capita pharmaceutical spend in India is extremely low, even when you compare that to the emerging markets. So therefore, on both these counts, I think from a slightly medium to long-term perspective, we remain bullish on this sector.
Okay, so it's a fairly positive call coming in on the pharma sector. Ajay, Meeta, as well as Mayuresh, thanks so much for joining in and dissecting Dr. Reddy's number for us. Ajay, in fact, I just wanted to talk to you about the overall market setup. Given